This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Ukraine has suspended Russian oil pipeline flows to parts of Central Europe since early this month because Western sanctions prevented it from accepting transit fees from Moscow, Russian pipeline monopoly Transneft said on Tuesday. International benchmark Brent crude jumped by $2 per barrel to trade near $98 as the news added to energy supply concerns, but turned negative later in the day. Europe is heavily reliant on Russian crude, diesel, natural gas and coal. Energy prices have rallied this year on short supply as Europe scrambles to replace Russian energy with alternative sources.
Major energy traders are taking hundreds of millions of dollars in losses as they scramble to plug a liquefied natural gas, LNG, supply gap after several outages hampered efforts to fill European storage ahead of the winter heating season. Unplanned disruptions at LNG plants in the United States, Nigeria and Australia have wrong-footed traders, including BP and Shell, forcing them to pay inflated costs for alternative supplies. In a market already struggling to meet global demand for natural gas after Russia sharply reduced pipeline supplies into Europe, the lost LNG cargoes, which can be transported by ship, have pushed global prices sharply higher in recent months.
Moving on to the top news in the energy sector.
Oil edged up on Tuesday, reversing an early decline as worries about tightening supply were revived after Russia said oil exports to Europe on the southern leg of the Druzhba pipeline had been suspended since early August. Russian pipeline monopoly Transneft said Ukraine had suspended oil flows via the pipeline leg because Western sanctions had prevented a payment from Moscow for transit fees from going through. Not that we need it at this point, but it's another reminder of how tight the market is and how sensitive the price is to supply disruptions, particularly those from Russia, said Craig Earlham of brokerage OANDA.
A tanker of U.S. sour crude was delivered at Germany's port of Rostock last week for the first time ever, according to sources, analysts and vessel tracking data, as local refiners test alternatives to Russian oil. The European Union plans an almost complete embargo of Russian barrels by year-end, and is trying to wean itself off Russian crude imports, which have fed inland refineries in Germany, Poland and other Central European nations via pipeline. Refiners plan to replace Russian oil with seaborne Norwegian, Saudi Arabian, British and US crude grades. Russia has already shown through its natural gas exports that it is willing to cut off European destinations in a tit-for-tat over the EU's financial sanctions that followed Moscow's invasion of Ukraine in February.
Next, we have the top news in metal markets.
Gold prices gained on Tuesday supported by a softer dollar, while market participants awaited U.S. inflation data for cues on the Federal Reserve's policy tightening path. Spot gold was 0.4% higher at $1,794.76 per ounce by 10:52 a.m. Eastern Time, 14:52 GMT, while U.S. gold futures rose 0.4% to $1,811.40. A weaker greenback makes gold less expensive for overseas buyers. The dollar index was down 0.3%. Gold is currently benefiting from a softer dollar and the Russia-Ukraine situation, while the focus is on what happens with CPI on Wednesday, said Daniel Pavilonis, senior market strategist at RJO Futures.
Copper hovered near one-month highs on Tuesday as improving demand prospects due to stronger-than-expected data from the United States and top consumer China were reinforced by a lower dollar. Benchmark copper on the London Metal Exchange was little changed at $7,984 a ton at 15:56 GMT. Prices rose to $8,020 on Monday, the highest since July 5. In the near term, better data means equity and credit markets are pricing out a more severe recession risk. In this context, base metals could catch up with this risk-positive shift, said Giles Coughlin, analyst at broker HYCM. We will now look at the top news in the agricultural sector. 2 more grain-carrying ships left Ukraine's Chornomorsk port on Tuesday, Turkey's defense ministry said, as part of a deal to unblock Ukrainian sea exports, bringing the total to leave the country under a safe passage deal to 12. The Ocean Lion left for South Korea, carrying 64,720 tons of corn, it said, while the Rami Yagki was carrying 5,300 tons of sunflower meal to Istanbul. The United Nations and Turkey brokered the agreement last month after warnings that the halt in grain shipments caused by the conflict could lead to severe food shortages and even outbreaks of famine in parts of the world.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.